Good morning, everyone. Welcome to the TradeStation Masterclass. This is a technical analysis presentation where we're going to highlight market gaps and take a look at some of the indicators and studies that are part of the TradeStation platform to help you identify and analyze market gaps. So before we jump into today's topic, let's go through some of the disclosures. Keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone, and that past historical performance is no guarantee of future results. For additional information on these disclosures, go to www.tradestation.com/important-information. All right, let's go ahead and get started. I'm going to switch over to my TradeStation platform. Where is it? Here it is. By the way, if I didn't say my name at the very beginning, my name is Jesus Nava. I am the Director of Client Training and Education for TradeStation Securities. Always a pleasure to talk about TradeStation and some of its features. Since we have a small class today, I'm going to allow you guys to enable microphones if you wish to do so. That way you can ask me questions if you want, or you can just type those questions and comments right there at the bottom. Not at the bottom, but in the chat window. And at the bottom of the chat window is where you find a little drop down where you can set it to everyone so that we can all follow along if you submit questions and comments, okay? So let's go ahead and get started. I did switch over to my TradeStation platform, but I wanted to show you some information here that is in my PowerPoint. And since I'm sharing a PowerPoint with you guys, I am also going to make it available as a download link right there in the chat. So I made some edits to the PowerPoint and to the PDF. So I wanted to make sure that you guys had the most recent version, okay? So here we go. Sorry about that. I was trying to get the link and make sure that it's available to everyone. So a gap is an occurrence in a bar chart where the low is above the high of the previous day or the high is below the previous day's low. So visually, it's something really obvious, or really something very that stands out, because a gap, it's literally some space in between candlesticks or in between bars. It seems like nothing happened in between. There's a big jump in the market, and that's a clear indication that a gap has occurred. Many factors can cause prices to move significantly enough to cause these types of jumps. For example, earning reports or good economic news within a particular industry can lead to gaps. Similarly, a stock breaking a new high in the current session may open higher in the next session, and vice versa. And they gap for these technical reasons. You know, everyone expecting a break on a 52-week high or a 52-week low. And that, of course, creates expectation and may drive the prices up or down, and in the form of a gap. Let's take a look at some of the studies that are in TradeStation that can help you identify this, right? Thank you, Matthew, for reposting the link. Let's go ahead and take a look. The first thing that I'm going to show you is two show-me's. I'm going to show you a show-me that pretty much identifies these gaps on the chart. These are pretty easy to understand and pretty straightforward. I know that these slides that I'm showing to you are really text heavy, but pretty much it's exactly what we just talked about. You know, what is a gap? Space in between candlesticks or bars. You can see the screenshot here on the left-hand side where the gap is very evident. You see there's space in between one session to the next. So those are the type of things that these show-me's allow you to identify. I know that it's a very visual thing. You may not need to see a blue dot because a gap is very visible, but sometimes the gaps are not so visible. You know, you may have a small gap that is not as big as these ones, and those are the ones that you probably need some help identifying. This second paragraph here just talks about gaps in general terms and how they should be interpreted. And let's go through some of these sentences very quickly. They can often indicate a trend or a change in the direction of a trend. A gap up bar study, we're talking about, if it gaps up, it can be used in conjunction with other studies that indicate trend momentum, direction, and strength, such as the ADXR indicator or the DMI indicator. In most instances, gap ups are considered a positive change in the market. Sometimes prices retrace on the next bar to fill all or part of the price gap that occurred on the previous bar. Gaps also provide support and resistance levels for subsequent price activity. So there are many ways in which you can analyze gaps. The reason for this class is not to tell you which one to choose, but to see what are the tools available in TradeStation to help you in the analysis of these gaps. So you may have interpreted the market as a and maybe you're more inclined in thinking that the gap will close. Those are the gap closers. But we have also the gap runners. If you interpret the market activity and you decide whether the gap is an indication that the price will continue in the same direction, and it's more of a runaway gap, right? So those are just different ways in which you can analyze these gaps. Let's go ahead and take a look at these two show-me's on the TradeStation platform and see how you can modify them. But there's two. There's one called gap up and the other one's gap down. So let me go over here to TradeStation and show you those two first. Let me open up a chart analysis. And this symbol that we see here, we can see some clear gaps. This one is very visual. This is the one that happened from Wednesday to Thursday. The market just gapped down, but very quickly you see how there's an increase in price and it closes the gap. There's another gap today, this morning, which is not very visual if you look at the price activity, but there's technically a gap. Now let's go ahead and put on the show me to see if it identifies those gaps that we're pointing out. I'm going to come over here to studies, add studies. Show me. In the show me category, we have the gap down and the gap up bar. I'm going to put them on. The style, I'm going to make it the thickest dot available so that it's very clear. And here we go. Let me squeeze the prices here on the right a little bit. And you can see that we have a gap up this morning in this morning's session because there's an actual space in there, not very obvious. We'd have to look very carefully to find it. But then this other one is a gap down, very, very clear gap down. The color of those dots just tell you the direction that the market gapped up or down. If it's a red dot, it gapped down. If it's a blue dot, it gapped up. So this is a chart that is going back a few days. You can see that there's another gap down here. While we're looking at this, I want to show you another indicator that I found that I used this morning that is not part of the PDF. Maybe it's one of those new indicators that John Brook, our in-house easy language expert, decided that we needed something like that inside of TradeStation. But if you go to Add Studies and you go to the indicator section, there's a gap indicator in there. It's called the gapless bar chart. The name implies that it's going to get rid of the gaps. Let's see if that's true. I'm going to click on OK. And it sure did. Now take a look at, this is the gap up that it originally identified, but you can see that there's no more visual gap. If you look at the other one, see that right here? But you see how the wick of the candle extends all the way until the previous session? So this is a type of study that removes the gaps and shows you a candlestick as if there had been some activity there. Remember that we were doing a price-based charting class, I believe this week, where we talked about momentum and range bars that would technically generate what's called synthetic bars. This is something similar because the fact that we have a wick here doesn't mean that there was activity. It just means that we're filling the gap manually with an indicator. And that's why the indicator is called the gapless what is it called? The gapless bar chart. Yeah. So I wanted just to point it out. We have it there just in case you want to fill in those gaps. A lot of traders feel like even though there is no trading activity there, it is still significant because it's a drop or an increase in price. Let me right click here and remove the gapless bar chart. And it works similar to a paint bar that paints every single bar that meets the criteria. But in this case, it's just looking for gaps and filling them in. That's what it's doing. Okay, let's go back here to my PowerPoint, which you have as a PDF. And I'm going to take a look at these two next indicators, indicator open gap and indicator open gap percentage, because this is the indicator that looks at the opening price of the chart and compares the opening price to the close of yesterday. So it's not, or it doesn't actually meet the definition of an actual gap, but there's always a difference between what the stock opens at and what it closed at the prior day. And it's just measuring how much that gap is, even though there may not be a visual gap between candles. So let's go ahead and take a look at what this represents and how it's calculated. Let me go over here to my TradeStation, and I'm going to open up a radar screen, because these are radar screen indicators. I don't think, they're not available as a charting indicator. So I'm going to go here to radar screen. Let me add the Dow 30. I'm going to remove the top row, which is just the index. And I'm going to add these two open gap indicators. By the way, there's a couple of indicators here for radar screen. They're called gap and reverse down, gap and reverse up. We'll get to them in a moment. So the one that I'm talking about here, here's gapless and bar chart as well. But the one that I have on the PDF, it's just called the open gap. So open gap and open gap percentage. Let me put those two right in here. And let me move them down a little bit. So let me make them be right after last. Okay, and this is what they look like. So the open gap indicator, it's looking at the opening price of the day and how it relates to the closing price of the prior day. So I can technically, let me add a custom one line just to do some math here. So let me go to custom one line, move it next to these lines right here. So if I just say open D 0 minus close D 1 bar ago, that should give me the opening gap. There's a slight difference. Opening gap, here we have 143. Let me do something here. Let me go ahead and add the opening. And I'm going to add, there's a column here called the previous close. Okay, so here's the opening and here's the previous close. If we look at the difference between the opening and the previous close here, we're talking about $1.32, which is the opening gap right here. So what is this telling me, 143? Let me see, what did I do? Let me go back in there. Maybe I typed in the wrong formula. Open for the day minus the close of the day of 1 bar ago. This has nothing to do with this time frame because I'm using OpenD. It sure has a lot to do with, that's really interesting. open D. So it's probably looking at the opening of the last 5-minute bar. So once I change the time frame of all the symbols, then my numbers kind of match. You can see that the opening gap is $1.32. My custom one line is $1.32, which is exactly the difference between the opening price of today versus the previous close of the day yesterday. Not only that, not only do we see a net gap, we also see the percentage that that represents. Now, the interesting thing about this, let me go ahead and resize this, is that I can see a chart. Let me copy this chart that has, those gap show me's in them. So let me go ahead and copy the window, come here, right click and paste the window. Whenever you have studies inside of a chart and you don't want to go through the process of setting it up again, you can do what I just did, which is copying the chart and then pasting it somewhere else. Let's go ahead and link these two charts together, or these two applications. I'm going to change the time frame of my chart to daily. And if I click on Apple, you can see there's several gaps in prior days, but you can see that based on the gap up or gap down show me's that we have on the chart, there's nothing today. However, these open gap and opening gap percentages are not looking for a literal gap. They're just measuring, the distance between the opening price of the bar and the closing of the prior bar. So for Apple, that's $1.32 because this bar opened at 144.31 and the previous one closed at 142.99, and that's $1.32 difference. However, we are able to sort by these values, especially by percentage, and notice which one is the one that has the biggest gap. If I sort, this is in ascending order, so you can see the highest negative gap. That was Chevron Corporation. It was all the way up here, and it opened down here. So how much is that? Well, it's just $1.24. Which doesn't seem like it's big, and it's not big at all. It's only a 0.75% of a gap down. So let's go to the other side. Let's go to the gap ups. We have one that is up 2.41%, which is Boeing. It jumped $3.19 from the closing of the prior bar to the opening. Let's go and take a look. But it's still, you can see that the current bar is not really a gap up. But it takes into account, the price where it closed at yesterday and where it opened up today. It opened up here. So in early hours of the morning when the market just opened, we did have an open gap. Not anymore, the gap closed, but that gives you a measurement of the bigger gap if that's something that you're looking for. So this is the other indicator that I was referring to, the indicator gap and reverse down and gap and reverse up. The description of each one of them here are pretty much the same. The copy or the text that I have here is taken from the documentation of help. So if you know how to access help and look for these indicators, this is pretty much taken from that. And even the graph showing you some of the inputs and what they do to the indicator are taken from that help document. I haven't been able to make this indicator work. And I know that last time that I spoke to you guys, I said, let me sit down with whoever wrote the easy language for this and find out what was in their mind when they created this. This is a gap and reverse that looks at several days. So this is not the type of gap up that only looks at 2 bars. You can define the number of days that you're going to be looking at, and that's the very first input there, number of days in the price extension, defined as a sharp multiple day move. So whenever you have a presence of an intense movement in price, whether up or down, you're measuring that and telling the indicator, look at a certain number of days. Now then it goes into a minimum consolidating index, which is, this input should be in the 1 to num days range. So 1 to this other input that we talked about earlier. And the larger the number, the more extended the price. So this is kind of measuring the extension, you know? So if you are looking back at 3 days, if you're looking back at 3 days, you're looking for the majority of the price injection to have happened in 2.25 days of the total. So remember that this input should be anywhere from 1 all the way up to how many days you're going to be looking at this indicator. But then it goes into a final range factor. It ensures that the final day's move is good size, suggested value 1. Then you have a gap size factor. So I'm not really sure, you know, the intention of the indicator, but it kind of tells you what it's trying to do, like measure, you know, these periods of intense price movement. But I don't know, I just don't see it. Has anybody here used these indicators? Let me show you how they look like on TradeStation. Well, first of all, they're not available on charting. So if you go here to add study, you're not going to find them here. The only ones you find an indicator is a gapless bar chart, a show me, you only gap down and gap up, and a paint bar. I believe you also have gaps. No, you don't have any gaps here. So those are the only studies you find in charting. This one that we're talking about is a radar screen study. So let me go ahead. Let me remove this chart. Oh, shouldn't have deleted it, but I did. Let me remove some of these columns, and I'm going to add an indicator that we're talking about. It's called the gap and reverse down, and cab and reverse up. Well, first of all, if you have it on a daily, if you have your radar screen on a daily chart, if I go to any of these, it generates an error because it says the function requires minute data. And if I change all these symbols to minute data, let's do 5-minute data. You know, these are indicators that show nothing here on the right-hand side. So if anybody has used this indicators before, let me know, and we'll probably, you know, work on something here. But it seems like, I don't know, I can't get these to work. Let me go to edit easy language for gap and reverse. So first of all, right here at the top, it's a grid indicator, so it goes on radar screen. Second, apply it to intraday data. That's why we were getting an error on daily. So this indicator will trigger an alert. So maybe the indicator only shows something if you get an alert at the first bar of the day, following an up extension period that meets the setup and trigger conditions for the gap and reverse down. So column 1, which is up extension, continuous display of upwards price extension status, true or blank, for the preceding number of days, will stay constant for the entire current day. So if it's not true, then it'll just be blank, which that's the confusing part. I wish these types of indicators would actually provide some information when the condition is not true, because it seems like the blank means something. So the down setup, which is the column 2, if up extension is true, this column displays the setup status, true or false. Okay. We can make some sense out of that, right? So if I go back here to my TradeStation, let me insert a bigger list of symbols. I'm going to do the S&P 500. Oh, here's one. True, false. So we have Visa. Let me remove some columns from here. Let's bring the chart from this other workspace, right click, copy window, and right click, paste window. All right, and let's go ahead and let's take a look at Visa. So Visa, up extension, true. Hmm. Yeah, I'm going to have to look at the code a little bit more and see, maybe it's looking at this price extension for the last few days. I don't know what this indicator is looking for. So if I sit here and try to tell you what it's doing, then I'll be lying to you guys. If you find that you want to use something like this in your studies, let's set up some time with John Brooke and we can talk a little bit about that a little bit more extensively. And last, on my PowerPoint, I have, well, two more things, strategies and the hot lists, because the hot list is also a very good way for you to see, which symbols are gapping up or gapping down and which ones are gapping the most, because we have some extremes here as well. We'll take a look at that. Let's go here to my TradeStation and talk about the gap up or gap down strategy. Now, the gap bars in TradeStation are not so frequently happening. Let me open up or load 1 year worth of data here. And I'm going to go to studies and add strategy. And I'm going to build a strategy on this symbol based on gaps. I believe the gap strategies in TradeStation by default will take a long trade if it gaps up, and we'll take a short trade if it gaps down. Let's go ahead and take a look. I should have used a different symbol. This is Visa, but I asked TradeStation to load 1 year worth of 5-minute data, and it's kind of taken a long time. Let me switch this to Microsoft, which I know I have the data for, and let's go ahead and add the strategy. Strategy is right there, gap up and gap down. Remember that if you use 2 entry strategies like these ones, they'll be reversing each other. So here's the strategy. Let me load 1 year. I do have 1 year worth of data, so this goes back and back and back. So let's go ahead and take a look at which direction the trade is being taken. So you can see, or you guys remember that we did have a little gap at the opening of today's session, and that's why it generated a long trade for the next bar. Not a very good idea, because you see how the price dropped right after and closed the gap. But if we had taken a trade, a long trade, every time we had a gap up, and a short trade every time we had a gap down, what are the results? Almost a break-even strategy. It's only a $39 loss, but you can see that it made $25,000 and it lost $25,000. Now we can make some edits here. For example, if you're trading a gap up or a gap down, you would probably not want to hold a trade for several days. For example, over here, we had a gap down. It generated a short trade, but then how long do we keep that trade? In here, it keeps that trade until you have a gap up, which may not be a very wise strategy, considering that anything could be happening in between if you don't have any additional gaps. So let me go ahead and add another strategy to this and see if it's going to make it better or worse. As you guys remember, this is more like a break-even strategy, but I'm going to do something here and add a close end of day strategy. Let's see, I think it's called close, or here, close at end of day. That's what it's called. So that way, every single trade will be exited at the end of the day of the gap. Let's see if that makes a difference. Oh, we lose more. Great. So maybe that's not the right way to do. However, we can see that we can start developing a strategy based on a gap. What if we turn the gap around? So instead of going long on a gap down, instead of trading short on a gap down, we go long. Well, here I can switch them. I believe the short entry on the sell short. So this is not doing it. This is not the way to do it. So this is a gap down, short entry, gap up, long entry. You'd have to, you can turn the status on or off, or turn the strategy signal into an exit instead. But since we have an exit at the end of the day, I just wanted to see if switching the direction of the gap, if that would have given us different results. But then I would have to go into the code of each one of the strategies and change it just to see if going long on a gap down makes a difference or is better than the other way around, okay? But that's it. That's everything that is gap related inside of TradeStation. I alluded to the hot list, but make sure that you're using the hot list as well to find stocks that have gapped. This is the hot list right here. Let me make the font a little bit bigger. All right, under activity, go to, this is under price lists. You have the gaps and they're all together because they start with the word gap. So you have a gap down dollar near the open, gap percentage. So if I go to gap down percentage, these are the stocks that have gapped the most from the close of yesterday. So we have here this symbol. It's really weird how it looks, I changed the font. It just didn't quite do what I was expecting to. Okay, so these are the symbol. That symbol at the very top, IIVIP, 4.97%. Let's right click and copy the window. Go back here to this workspace and paste it. And let's put it over here. All right, this is on a 5-minute chart. This symbol has no trading activity. If you guys take a look at the trades, there's only been 11 trades on that symbol, and that's why it looks like this. The same goes for this one and this one. Although the volume is a little bit higher here, there's only 11 trades. You can see how the bars are very sporadic. Not a lot of volume on all these stocks. So not very exciting what's happening here. Let's go here to gap up percentage. And we have some higher volume. For example, here I have IMRA, which is the one that gapped the highest. And let's take a look at the chart here. You can see the big gap right there. You can see how we were trading at around $2.55. This morning, it gapped up to almost $3.60, which is very, very impressive. That's a 20% gap. So those are the ones that gapped the most. But then you can take a look at, the gap up closers and the runners. So those are different ways in which you can identify symbols that are gapping up and may provide a certain trading opportunity, okay? Well, guys, that's my information for today. Thank you for joining me in this masterclass. It is Friday, so I want to wish everyone a great weekend, and I hope to see you in my future masterclass sessions next week. Have a wonderful day. Great having you here. Bye-bye.